Good afternoon, everybody. Welcome to TraderMerlin Show for your Monday edition. That's right, I took Friday off, so it's a Monday edition. It is the 15th of August today. As you may see, I'm already hot. I had the guy here for 3 hours on Friday to fix my AC. Fixed downstairs, upstairs, still not working. So I'll be sweating for a while. I'm actually buy a window unit to cool this upstairs off, or at least for the next foreseeable week or two, just to keep this place cooler. But anyway, happy Monday, everybody. Hope you had a good trading session out there. Today, I had a couple questions regarding what a short squeeze was, especially because what's gone on with Bed Bath & Beyond. So I thought I would look at that, kind of revisit that topic. I know we covered it maybe 2 years ago, but some of you may be new, have some new people out there, so why not discuss what that is. But first, I'm going to run through our top 7 markets here and, of course, go to any listener questions. If you guys do have questions, put them down below the YouTube video. That is the best way to do so. Les asked a couple really good ones. One was on backwardation and contango. I'm trying to get John Rowland on because I give an explanation of it, but I think John would be much better to answer that question. So I'm going to see if I can get John Rowland on maybe this week or next week to talk about backwardation and contango and how it impacts the financial markets. And that'll be probably might do a whole show just on that topic. But keep those questions coming in. And of course, if it's something that you want to address to me personally, you can do it at TraderMerlin@gmail.com. All right, let me start things off just by looking at our top 7. Crude oil, we talked about this one last week where we say, look, it's on a nice rally up. It had 4 really beautiful up days, but right into a base drop, hit that supply zone, and it is ripping down. And as I've been saying, even though things are starting to look great for the equity indexes, some of these commodities, especially crude oil, still in this downtrending phase going back to June of this year. Lower lows, lower highs. So I don't expect that to change. And if it does, then we can start to look at going long. But right now, stay short. You know, that the bottom point here, right where it hit about a week ago, is a pretty critical point. I mean, that's one that it also was a bounce spot all the way back here into, let me get the date for you. Going into February 18th of this year, it knifed down there, ripped up, and now we're back sitting at that level. And for all intents and purposes, it looks like this thing's going to keep on drifting down. So, hey, you know what? Maybe inflation numbers just get better and better and better going forward because crude oil is such a big part of that measurement. Now, let's move on up here. Gold was down 1.17%. Silver down even more. It was over 2% downside for silver today, but a big engulfing candle here. For those who don't know Japanese candlesticks very well, you have this big red one that completely encloses the entire candle before. Tails, wicks, everything is inside of this red body here. So that's a pretty big bearish signal here. Now you do have some unfilled gaps on this futures market that goes all the way back down to right around 1719, which would be about an 80-point drop from here. But right now, just an engulfing pattern as it stands. We'll see if it continues on over the next couple of days. And that was gold down to 1794 or 1.16%. Now, the last negative one for today is cryptocurrency. I've got this mapped out here being optimistic, expecting maybe to be a nice big pop or rally to the upside here because of this ascending triangle formation that we have. But one thing to notice here is over the past 3 trading sessions for the futures, we will look at other markets here shortly, but over the 3 trading sessions for the futures, you have these really 2 long topping tails. So for whatever reason, it has been trying to move up, but then just gets pushed back down. So there still is a bit of pessimism out there. That's why you keep seeing these things with long topping tails. But that said, for there to be pessimism and these long topping tails means you have to have optimism at some point. We'll see which one wins out here in the near future. I think it's just we're coming right to the apex of this triangle. Generally, it's going to rip one direction or the other, and my expectation is, just given the way the trend has been over the past month, that break should be to the upside. Someone shorting Merlin's AC, yeah, it feels like it, man. Just the upstairs. Downstairs is nice and cool and relaxing, but upstairs, sweat lodge, man. I feel like I'm one of those, put some coals in the sauna up here. All right, keep going. Now we start with the indexes, which were pretty much all in positive territory. Russell 2000 has been looking absolutely incredible. Thought there might be a little hesitation here. I mentioned that day I was thinking of shorting it. I didn't, and it's funny because the next day I was like, damn it, I wish I would have shorted, but I guess you should trust your gut instincts because over the next 4 sessions, it just ripped to the upside. Now, if we look at the Russell, something that's noteworthy here for anybody who's trading that Russell, we've been spotting these levels of supply, which has just been knifing through with ease. There really hasn't been any hesitation in this current up move, and now you're right at the next area of supply, which is right around 2040. Now, currently, Russell's sitting at 2023. Intraday went slightly higher than that, hit a high of 2024. Looking good, but there is a supply zone right here. But if you're a longer or intermediate term trader, you got to stay with this trend. It's buy that trend and continue to buy pullbacks in this up move here, just because that's what it's doing. Not that it's not to say it can't have a pullback from these levels, which I've been expecting a pullback to happen. We've had one red day over the past like 2 weeks on the Russell, but all in all, it's looking amazing, and it's at overhead supply. S&P 500, similar picture. You have just a stair step up going all the way back to June 15th, which has been beautiful for those of you who are numbers junkies. We are off the lows to the tune of about 20%, well, not 20, but right around 18% move up in the S&P in the last 39 trading sessions. So the past month and a half, 2 months, pretty amazing run up there for the S&P 500. Today closing at 42.95, up 0.33%. All right, Dow. Similar picture to what we saw with the Russell, right? It broke through those highs that go back to June. Now we're challenging these highs that go back into May of 2022. I can move this horizontal line up now, and you can see there's a pretty solid line that goes right across these peaks from April 25th, 26th, and May 4th and 5th. That to me is the next target. 34,063 would be those exact numbers there. Currently we're at 33,846. So basically another 200-point move, and we'll come right into the top of that overhead supply. After that, it's a straight shot up to 35.2 and change. All right, finally, the big dog. Thank you, probably because of Tesla. Thank you, that Tesla trade just been saving my butt lately. Here you have that breakout, retest of that breakout line on the NASDAQ, and now just trending up. Now, the interesting thing is this downtrend line that we've had drawn here, broken, gone. Totally get rid of it. Doesn't matter anymore. And at this point, you're basically just thinking long, even though it feels like there's all this dark cloud circling the economic markets, and economic data is starting to get a little better in some spots, but normally not looking so great. Well, if you're trading this at all, especially if you're a shorter term swing trader, your bias should clearly be bullish at this point. It's basically buy pullbacks and just keep riding and holding on to these long trades. These last couple days have been great for the NASDAQ. As much as I'm in disbelief about the rally, can't argue it, got to go long. So I will probably be selling some puts here. I'll probably next Monday once my options expire. I have a bunch of options that are going to expire this week. So if they when they do expire, I'll be selling some more puts. Ideally, what I would like to have is a pullback into a demand zone, let's say down here right around 13,000 on the NASDAQ by next Monday, and then I can sell a whole bunch of puts there and join this rally to the upside, collect my premium, and just kick back and enjoy it. So that is your top 7 markets out there today. NASDAQ clearly the best, up 0.74%. For those who are wondering, the dollar index bouncing pretty good off of that demand zone right at 105 that we'd mapped out. No, Susan, Sam is not going to be on my show. Sam has decided to go work for Satan himself. He works for Sam Seiden at this moment, which I'm kind of in disbelief that Sam Evans would go to Sam Seiden. But there's no mystery here. I think Sam Seiden's one of the biggest scumbags on the planet, and I will have nobody on the show that has anything to do with that scumbag. So, unfortunately, I actually really like Sam Evans. He's a friend of mine, but given this current situation, who he decided to work with, I will not bring him on, unfortunately. Sorry. All right, so there's our picture for the U.S. dollar. Now, what's noteworthy here, I had this yellow box drawn a while back. I think it could possibly be redrawn here into there. And again, we're near the upper end of it. Now, do I want to incorporate these tails? Yeah, I could do that too. You know, and this isn't anything precise. It's just rather a loose representation of where price has been traversing back and forth between for the past, a month or so. At this point, I'm kind of torn. I'm still bullish on this U.S. dollar, but you notice it has had a slight downtrend for the past couple of months. It's the bigger picture trend that's important. And I drew this line down here at 103.58. In my opinion, if we get below 103.58, then we can probably start to write off the overall uptrend we've seen and either look for sideways or potentially even downtrending markets going forward for the dollar. But as this dollar continues to rise, that will put more pressure on the equity markets to the south side, and maybe we'll see some of these indexes respond to their overhead supply levels that they're smacking into right now. Now, yeah, that's very true, Randall. Very true. Well, also people need to earn money, and I get it. So you got to do what you got to do. The 10-year really has not been much of a story lately, right? We had this break of this head and shoulders pattern for the 10-year. This is the yield on the 10-year. So I was actually expecting this to drift down lower here. Maybe not all the way down to this blue line, but it does still feel like that downtrend is intact, even though we broke it. We didn't get the big follow through that I wanted. But honestly, this picture right here looks just like it did back in 2008 when I was calling for a market crash. It tiptoed down below my 1260 mark. It rallied up for a little bit, and then all of a sudden, it really started to gain momentum to the downside. So shockingly here, this is the yield on the 10-year. Right now, you're at 2.79. Anybody who's getting a mortgage right now probably happy to see that because we were at about 3.5 back in May. So it's nice to see this drift down back in June, nice to see this drift down a little bit just because that means cheaper money for the economy, and the cheaper that 10-year gets, the more likely the equity markets will surge. So most of you who are bullish, you want to see this 10-year drop. You want to see that dollar drop as well. What about Tim Pessett? Susan, I've reached out to Tim a few times to get him on the program. He hasn't responded back. I'll reach out to him today. Still one of my faves. I like Tim Pessett. What about Jeff Manson? It's funny. I don't know how you say these things. While I like Jeff, there's certain business things that were done recently that I left a very sour taste in my mouth. Probably all I'm going to say on that. And it's not necessarily Jeff. I think it's, I'll have to leave it at that. How about Michael Burry? Oh, Larry, that's a good one. So let's talk about Michael Burry. Since I went through the top 7, I will get to this. I'm not trying to do clickbait. We'll talk about what a short squeeze is. I know some people joining us are going to be like, you're clickbaiting, just get to the goods. Let's talk about Michael Burry. So he sold every one of his positions except one. I can't remember off the top of my head what it was. It was like Geo or something like that. It's a prison company. Interesting. A lot of people find Michael Burry is this magnetic personality, and because he was so right with what happened in the housing markets back then, that he's like this oracle and one of the best. Well, I don't know. I don't ever really follow his advice, but it's interesting how the media is always profiling what this guy's doing. Now, he sold a ton of his holdings, and if you look at the market right now, let's just go back into a bigger picture view of it. Is it a bad thing to just sell that market right now? Probably not. Really not. It's. I think it's actually a decent thing to do. He's selling into a rally to the upside, coming into some supply. Of course, he had to file, I think, documentation because he's such a big holder of these shares, so he may have to have filed special documents with the SEC, so they may not be recorded as of like today. But this is changes in his portfolio over the last quarter. He's probably right to sell. Why wouldn't you sell after the market's up 600%? Probably good to dial it in a little bit and lock in some profits. But he's keeping one of them out there. You guys are kind of funny. What about Bashir Chaya? I'd love to get him on. He's in Lebanon, so the time zone doesn't work. What about Robert Kiyosaki, Donald Trump? I won't have anybody. No, Donald Trump won't be on the program. Kiyosaki, I wouldn't mind. It'd be interesting. Let's see. What did he say? What about Neil deGrasse Tyson? Man, I would love to have him on. I don't know what he would have to say about trading, but I actually really like Neil deGrasse Tyson. He's one of my personal favorites. All right. Blue Diesel, is that sell short squeeze realistic in crypto? Okay, I'm going to get back to that, Blue. Let me talk about what a short squeeze is, and then I know most of you understand clearly, but I want to just show not only what it is, how it works, but where you can get more information on it and scan and filter for them. So let's start real quick about what is a short squeeze. So unfortunately, there's a bias on the part of the retail investor that is predominantly long. You have two sides of the market. You have long and you have short. Long meaning you think prices are going up. Short means you think prices are going down, period. The challenge for most people is when you sell short, you're literally selling something that you don't own. You're borrowing it from somebody else, usually your institution that you have your trading account with, and you are essentially borrowing it and selling it to somebody else who would like to buy. So who's right in the end there? Time will tell who's right in that transaction. Now, the borrowing side's where it gets tricky. It's kind of like I sell you a bridge that I don't own. Okay, well, I'm borrowing it from the company that owns the bridge and selling it to you. So there is ownership. Now, behind that smoke and mirrors piece that goes on in the financial world, to me, there's some shady stuff going on that should be questioned by the SEC to a large extent. And I'll explain why here in a second. In the markets, there's always shares short of a company on almost every security, just about. There's a couple situations where they can't short. It used to be that for like the first 30 or 90 days, you can't short an IPO. I've seen that violated. Generally, if things are very thinly traded, like if it has a few thousand shares traded per day, there may not be any shorting going on there, right? No short interest. But what you're seeing in some of these situations, like GameStop, like AMC, and now Bed Bath & Beyond being the newest one, is people are hunting for heavily shorted securities and then colluding, which is technically illegal, and basically getting a whole group of people together to perform an action all at once, spreading all the news about it, and getting that security to pop. So let's just use GameStop as an example. I'll go to GameStop and go a ways back here. So what you had was, back in this period here, a security that had heavy short interest. It was over 140%. It means for every one share that existed, there was 1.4 shares short. First question should be, how is that even mathematically possible? How can you create? Basically what was happening was institutions were saying, yeah, we'll honor that, and they were just allowing people to short more than humanly possible, more than market possible. The SEC, in my opinion, should be on that and going after those individuals that allowed that to happen, but they're not, because the SEC, in my opinion, is pretty incompetent. Maybe they just don't have the resources to do their job, but man, I can spot so many things that happen on a regular basis that the SEC just seems to don't even care about. Anyway, if you look at the chart of GameStop, you'll notice that back here in August, 2020, you know, it was dead in the water. It was right where it should have been, 99 cents. Junk company, not going anywhere, no prospects, no major revelations coming out. This company was dead in the water on its way to zero, a slow sinking ship. It had 140% short interest. So all of a sudden what happened is people online saw that this was so heavily shorted. And remember, if something is short, let's say you sell something short. So I'm an institution. I'm the Merlin Rothfeld hedge fund, and I'm out there shorting companies. Ultimately, how do I make my money when I short? Well, I short by selling it initially, but I have to close that transaction. In order to close that transaction, I have to buy back the shares. So what happens is these people they'll hunt them down online, basically looking to see who's heavily short, and they will start to accumulate a lot of shares, even though it looks like garbage and doing nothing but trending down. They'll accumulate a lot, and then what they'll do is they start going out on Reddit and Wall Street Bets and all these different social media Yahoo chat rooms that are basically pump and dump rooms, and they convince everybody out there, dude, you got to buy this. Let's do a short squeeze on it. And you got companies like Melvin Capital and Citadel and Goldman and Morgan Stanley are heavily short because it's a trash stock, yet this small group of people can, with enough collective effort, and we're talking, you know, millions of Robinhood traders that are trading maybe 100 shares or 10 shares or even a share a piece, all buying into these things. So what happens is it spikes price up. And when that happens, these hedge funds or somebody who might be short can get margined out. So let's say, for example, I shorted something at $100. Well, if it starts to drop, I'm making money. But if it goes up at all, I start to lose money. So some of these companies may have been shorting at $3 and $4, whatever. All of a sudden it rises up to a certain point and they can get forced liquidated. If they're margined too heavily, this is why margin is so important. If you margin too heavily, a short squeeze can liquidate you in just a small little move. So let's say I'm leveraged to the hilt, right? And my average price on this stock is let's say $4, right? So you guys can see on the hard right edge of this chart, $4. That's where I'm at. If it closes, let's say at $4.50, that's my leverage out point. So there you go. There's the picture. I'm so short. I've got millions of shares short. But if it gets above $4.50, I'll get liquidated. So notice what happens the next day. Boom. It spikes up all the way up to $4.90. Now what happens is I am now forced liquidated. So let's say I've got 100,000 shares short of GameStop at this point, and my liquidation price is $4.50. Well, what do you think happens? Whoever I borrowed them from says, we're taking those back right now, and they will force me to buy those shares. And all of a sudden, well, that didn't exactly work that way, but you start to see more pops like this. A lot of these are forced liquidations, especially once we get into January and February of 2021. You see these huge moves to the upside here on GameStop, and it's not even done. I mean, it goes even higher than this. Was it GameStop? Oh, they did a split? They recently did a split because this went all the way up to like 450. But this is all short squeeze action here, where people found that there was heavy short interest and it was forced squeezes out there, plus people were using options on this, and all of a sudden you had gamma squeezes, which we did a show about with Corey Lane a while back on this program. So a short squeeze is basically when someone sees there's heavy short interest in a stock and they force people to get out of it. They will literally keep pushing price up and keep buying, even they know this is a trash company. They just keep on buying and buying and buying and buying till it force liquidates all these people. Now, if you look what happened with Bed Bath & Beyond, here's the most recent example of one. All right, let me go way back to the current data. Sorry, I'm trying to get to the last few days. Here you have what's gone on with Bed Bath & Beyond. And I'm pretty sure all of you would agree that Bed Bath & Beyond, you just shrug your... If I said, hey, what's your thought about Bed Bath & Beyond as a company? I think most of you would be going, yeah, I don't know. I mean, who's been to Bed Bath & Beyond here recently? Probably not that many have been to Bed Bath & Beyond. There's really not much of a reason to go. It's not like you get amazing deals. I've gone into Bed Bath & Beyond, and while I was literally looking at the items I wanted to purchase, I pulled it up on Amazon. I got them for 20% less, delivered to my house tomorrow. Bye-bye Bed Bath & Beyond. Same thing with Best Buy. However, they had heavy short interest. I believe we looked at the number the other day. It was like 80% short interest on Bed Bath & Beyond. So what's happening is these big gaps are forced liquidations. People are being forced out of their position, and who knows where the high is for this one, right? I don't know exactly where the high is going to be, but I can assure you, I can promise you that at some point, this is going to come crashing back down with all pump and dump short let me take that back. That's not exactly true. With most pump and dump short squeezes like Bed Bath & Beyond, AMC, GameStop, and several others, it usually has a huge run up and then comes crashing back down. Now, shorting right now would be nuts, especially if you did like a weekly option. That'd be crazy. However, if you shorted this and said, I'm going to buy some puts that were maybe for, let's just say, December, you're probably okay. My guess is, it'll probably reach a high of, let's say, $30 here on more short squeezes, and then it'll just all of a sudden collapse and start to drift down and head back down towards those, towards the lows right around, probably go back down to about $10 or so. You know what? I have not checked out Billions. Everybody keeps talking about it. You guys are hilarious. Julia Childs, is she still around? Can I get Julia Childs on here? Joe, you're absolutely right. So the fines are laughable, Merlin. You can make billions and only be fined millions. You don't even get fined millions. It's ridiculous. I made the analogy many times in this program. The way the SEC structures it is this. Let's say I go to my local 7-Eleven and I steal a Snickers bar. And I keep stealing Snickers bar. I mean, I've stolen 100 of them, and finally I get caught. They call the cops on me for my Snickers bar. And the Snickers bar is, let's say $2. And the cops show up and be like, okay, you're going to get in trouble. Pay the owner 10 cents and we'll let you go. And we won't write you up. You have no track record. You have nothing on your record. So you're telling me, wait a minute, I just stole something that was worth $2. I have to pay a $10 fine. That's it? And I can walk away without ever admitting that I stole something? I will be back at the store tomorrow and steal more. That's exactly the problem with the SEC. That should be such an intense penalty for what these firms are doing. I'm talking Goldman Sachs' crimes. And if you don't believe me, you think I'm being hard on institutions, all I would encourage you to do is go to Google and search for your favorite financial institution and just type in SEC settlement. There is every financial, Goldman Sachs, billions of dollars in settlements for disgorging investors, misleading information. Same thing with Morgan Stanley, Merrill Lynch, Wells Fargo. It's a dime a dozen out there. So it drives me nuts. What they should do is say, okay, you made $2 billion off of this. You're fined $4 billion, and 3 of your people are going to prison. This would stop this industry cold in its tracks. You would no longer get that manipulation, because people going to prison and losing everything, that would make a big difference. I tell you, I mean, I am not a criminal in any way, shape, or form, but if I knew that I could get busted for robbing a bank, I can go in there at gunpoint and rob a bank, and every time I got caught, I'd pay a $50 fine or a $100 fine or even a $1,000 fine. I'm going to rob every bank that I could possibly rob, because what's the punishment? Now, if it was life in prison, I ain't touching that bank. Hell no. Crazy. The Bed Bath. Daniel, you're not supporting your local Bed Bath & Beyond? Shame on you. You need to get back in there and support. I mean, why would anyone buy it? Exactly. Ooh, that's good, Chase. Good puns flowing today. Bed Bath & Beyond me, why anyone would buy it. I like that. That's probably what the name should be changed to. So let's go back one step. And for some of you, let's be honest, short squeezes can be amazing ways to, in this market, I believe, to capitalize and make big money. However, if I have my portfolio of all of my assets and we start to slice up into a pie chart and say, okay, this is the stuff I'm looking to generate income. This is my long-term growth portfolio. Here's my day trading and short-term speculation. And then this little sliver, this 1%, maybe 2% of my overall portfolio, that'll be in the gamble side. And that's where this goes. This is such high-risk stuff that you're lucky if you make any money on it. And when you do, you'll be gloating to everybody saying what a great trader you are, like all the Reddit Wall Street Bets guys do. So what do you look for? Well, let's go out and look at FinViz real quick. So FinViz. Now, there's also specialty sites that will look this stuff up for you, but I don't know them off the top of my head. Now, what you do is go to FinViz, go to their screener, and you'll see here there's right in the fundamentals section here up the top, descriptive, it says float short. Okay, so first off, you need to understand two different numbers. The first one is called shares outstanding. That's the total number of shares, and then you have float. That's what's available to the public. Now, there's generally going to be a discrepancy there. Normally, the shares outstanding is going to be greater than the float, right? Because the float is what of the outstanding shares is available for you and I to buy and sell. So notice here it says float shares. You can go CliK and change it to percentage. So let's look at things that are over 30%. Right? Well, let's start with under 5. These are companies that nobody is shorting, right? It's like, no, do not short these ones. This is very, very good company. There's a lot of them that have very short interest. I mean, you're talking hundreds, very, very low short interest, under 5%. Now let's go to over 30. I have, let's see, all these companies. I've got 45 different companies that have over 30% of their shares short right now. Now, unfortunately, with this, I can't go through, I don't believe I can, I just haven't taken the time. I can't change the header to show me exactly what the short interest, but I'm just going to pick one to choose from. And the first thing that I would do is once you've sorted this, right, now I know every one of these has at least 30% of their shares short, I sort by volume. And this is important because you want something that has volume. Otherwise, you're probably not going to be able to get options on it, and it's going to be hard to trade. So notice here, these top ones, almost everything on this first page is over 1 million. Great. So let's go over here on the left-hand side and see if there's any that we like to look at. Bed Bath & Beyond is number one. It's got 162 million shares traded today. Great. It's up 23%, by the way. But notice these first three. They've all had big surges. So I'm going to go with Performance Shipping, PSHG. If you look at the price chart, what I like about it is I want to find something that may have not been squeezed yet. If you look at Bed Bath & Beyond's chart, look at that. That's squeezed, right? It's gone from $4 to 16. That's squeezed. You got Hellbiz has gone from like 40 cents to over $2. That's already squeezed. This one, Revlon, looks like it was squeezed. Wow, Revlon, interesting chart. It was under $2, squeezed all the way up to 10 back in June. PSHG doesn't look like it really has had the squeeze yet, but it's got heavy short interest. If you guys have questions on what on earth I'm talking about, just type them in the chat. I'm watching. Here's Veru, already been squeezed. So again, I'm just trying to find something that may have not popped yet, right? Fubo TV, from under $2.50 to almost $5. Sirius, just stay away from Sirius. Nikola, no wonder that thing's heavily shared. Shares are heavily short. Blue Apron. All right, let's go back to PSHG just to see what percentage of shares are short. So you click on it. You can scroll down here. And short float. So right now it's running 40% short. Now, 40% is certainly nowhere near the level of 100. Like if you get to 100% short interest, I mean it's got to go up at some point because these scanners are going to pull it up, and a lot of these Reddit rooms are going to start pumping it and jump on those. My big issue with this. Can you buy Bass at Bed Bath & Beyond? You can't. I believe you. I don't know if you can buy. I don't think you can buy showers or vanities, but you can buy beds. I've seen mattresses there, and lots of pillows. So one thing that you could do is you could find a scanner or filter that will show you the exact short percent of float, and if that number is over 50, 60%. There's a very good chance that in the near future, you're going to see someone identify that and spike it to the upside. in my opinion, from my style and my experience, it's gambling. It is absolute gambling. You're just getting lucky if you actually hit one of these. But man, they can make a ton of money. Now, I'm going to be playing it the opposite direction. So for example, I will be looking at Bed Bath & Beyond as a potential short. I'll be looking to buy some puts on Bed Bath & Beyond at some point here in the near future. Once it, a level I'd love to, if it got, I told you I think it might get up to 30. If it gets up to 23, I'll buy options that last for a few months and go for it. Hey, Linda, good to see you. The other thing that I've done, I did this in the past with GameStop, is I sold puts. So right now you can see Bed Bath & Beyond's trading at $16. I don't remember the exact price, but it was like, I sold puts at 50% lower, so $8 in this example. And I made like 15% for the week. I mean, there's huge potential there, but there is obviously, as you all know, there's going to be a lot of risk involved with this as well. So personally, I would say leave it alone. I looked at this one today just because it came up into a supply zone, which wasn't great, but I'm still not convinced that it's done. I think this thing will still probably rally some more because of all the press that it's now getting. But at some point, they're going to bail on it. And you got to put yourselves in the position of an institution. So if I look at that chart right there of Bed Bath & Beyond, and I was shorted, let's say, $6, and now it's at 16, I'm shorting more. And if this thing jumps to 30, I will break out as much money as I can to continue to short this. Because at a certain point, who has more money? The collective Reddit, Wall Street bets groups, or the major institutions? They can't short squeeze it forever. And ultimately, you'll get some pop and ruin a couple people. But the reality is, the big money's going to come back in. And there's an old phrase I love in the market that says, if you liked it at 50, you're going to love it at 20, Well, same thing with shorting. If you were short at $8 and now it's at 16, short more. Double it. Especially with companies like Bed Bath & Beyond, companies like GameStop, right? I've been saying for a while the GameStop is probably headed to zero. I think when we had it here, I said 5 years out. So this was January of 2021. I said 5 years out, GameStop probably won't be around anymore, right? It will probably be bankrupt or just gone altogether. Now, AMC is a different story. I think AMC will stick around, but you look at the prices that AMC achieved. This is why I love looking long term. You go back on something like AMC. Here's back into 2014 when we were COVID-free and in a good bull market. Things are great. People are going to the movie theaters and just having a good time with life. And notice even then it was drifting down. I mean, it went from $36 all the way down to a low of roughly $1.74. Now there may be some splits involved here, but just kind of showing you've got this. It was already dying company before the short squeeze, and then you had this massive pop and squeeze that you see here. Well, it just begs the question: where is this thing going to go? Is it going to go to 30 or 40? I mean, movie theaters are no longer back where they were. There's no lines waiting to see the new movie that comes out. They're not packed, right? I went to go see Top Gun the opening weekend. I was like, okay, great. I got the seats I wanted. Good times. So, this one won't disappear, but is it really going to get back up to 75 like you keep reading in the Wall Street Bets chat rooms? Get that money from those diamond hands. That's right, Daniel. I mean, it cracks me up when you look at some of their rhetoric and talk tracks they use on social media. Diamond hands, I'm never selling. Yeah, well, you're never going to get your money either. You're going to go broke. What do you mean by HTB? You tell me what do you mean by HTB, my test? I would say higher time frame buy, but I would say Best Buy is not a buy on any time frame personally. Oops, this is BBB. BBBY. 3 Bs. If anything, I'd be looking at this as shorting opportunities. This 3 weeks of it is just a crazy, crazy, crazy chart. Let's see. You guys in your Bed Bath & Beyond comments are great. So, any other questions on short squeeze? Oh, hard to borrow? Thank you. Yes, my guess would be yes. I don't know. I haven't shorted Best Buy. But generally, when you have these squeezes and abnormal price moves, they are hard to borrow. If you were with a smaller moment, yep, thank you. I should have known that. My brain just wasn't working with that one. Generally, they will be, especially on short squeeze. When this type of stuff is happening, because it's all the talk right now, short squeeze, short squeeze, short squeeze. This is a huge risk for anybody loaning you those shares, right? So if I'm E-Trader, Ameritrade, Schwab, Morgan Stanley, and I'm lending these shares out to my customers, I've now put my customers at greater risk by allowing someone to short. I now run the risk of potentially liquidating that customer down the road, and a lot of them will restrict that or maybe give you a couple of shares versus a whole bunch. Well, that's different, GS. So GS33 says, funny, I've made more shorting futures than going long. Hey, I am a huge advocate of shorting. This is by no means a smashing or a tongue lashing at shorting. I love shorting. Shorting is awesome. What I'm focusing here is particularly on things that are so heavily shorted in short squeezes. I as well do better in downsides. So G3 or GS, I'm with you. I've done far better over the years shorting the markets just because I think the moves are more violent. It's preying off the emotions more. Going long is the slow and steady wins the race. Shorting is generally really fast, aggressive, sharp moves, usually. Not sure. Lisandro, we can check it out. Yeah, there's a couple ways you can check out halting. You can go to the NASDAQ has a really great source for looking at if they've been halted or not. Otherwise, if it's intraday halts, you'll be able to see that by looking at a 5-minute time frame and just looking for like straight dash marks. So this is after hours trading. Let's get rid of the. I'm not showing you the chart. Here is the regular hours trading. You'll be able to tell halts by a series of dashes. It looks kind of like my cursor line right now. I have a hard time going long too. They may be limiting you. One thing that I don't really focus on much anymore, Gallo, and if you are active trading, you should check this out, is looking to see what the level 2 screen looks like. So maybe I'll do a show on level 2 so you guys can understand how to read that. But level 2 can give you clues as to how liquid something is. You might suffer slippage, especially if you're using limit orders. You may never get filled. Right? If you're using market orders, you might get some horribly bad fills simply because there's such low liquidity. And what will happen is those price zones, instead of having a lot of buyers and sellers at each price level, there's almost nobody there. So a small order can move things very, very quickly. What's a good way to send you messages for future shows? You just send them to TraderMerlin@gmail.com and say this is for the future show. You mean for future shows or for a show about futures? Anything in the future... just send it to TraderMerlin@gmail.com. Email's on the screen there. And I usually put them into the PowerPoint and try to get it to all of those as well. What else? AMC hasn't made enough money from selling expensive popcorn. I don't know who buys their... Yeah, I know. It's funny because I always feel guilty. Like I want to smuggle in my own popcorn. Although I can't get the same flavor. Movie theater popcorn's the best. But like a soda. Like I'm not spending $6 for a soda. Are you kidding me? I'll bring my can of Dr. Pepper, and right as I open it, I'll try to sneeze to cover the opening of the cans. Like, achoo! Oh, yeah. Movie theaters get you with their concessions, but got to support the businesses. I have been. I did buy popcorn and a soda at Top Gun Maverick. I just had to support it, and that one I would actually go see again in the movie theaters. So that's the basics of a theater of a short squeeze. They are, I guess, just a market phenomenon, especially that generally happens with companies that are bad. There's a reason why people are shorting Bed Bath & Beyond. There's a reason why people are shorting GameStop and AMC. There's a reason why people were United Airlines and Carnival Cruise during COVID. Why? Because they're dead in the water, no pun intended for the boating one, but they're not going to make any money. All right. Now, after that, something very different. I haven't looked at CCL in a while, and since I bought puts on it. Carnival, $10. Woo woo! Look at that chart. Wah wah. $10 on Carnival. Notice we're out of COVID, right, everybody? We're out. We found all those vaccines didn't really work. Okay, great. But notice where we are. We're at the pandemic lows on Carnival Cruise Lines. Long term, I don't think cruise ships are going away. I think that they're definitely here to stay. Boy, look at this trend line down through here too. I mean, I can keep that one going. Anyway, right back to those dead pandemic lows. It might not be a long-term play. Might not be a bad long-term play if you're looking at Carnival Cruise Lines, because I know they are starting to get back into action and they're actually moving. I mean, there are cruises happening, weird stuff going on with them. And then let's see, United Airlines. we hear so much about airlines right now doing crazy business, making tons of money on flights, and they're totally packed. Well, United Airlines is still only at $40. Before the pandemic hit, it was at $90. Rum is always good to sneak in. Num, num, num. That's true, Larry. You just can't win anymore at a movie theater. You just can't win. All right. Let me real quick. I had like 2 questions. Actually, economic data I wanted to get to. And then I got a whole bunch of stuff. So let me just real quickly look at what happened today. I should have done this at the top of the hour, but I think that this is interesting to look at. This is the economic announcements that came out this morning, and not a lot of good stuff here. We started off the markets rather weak and ended fairly strong, even though it wasn't a huge number. It's just the trajectory and what happened for the market over the course of the trading session, in my opinion, was pretty darn good. I mean, here's the chart of today's market. We were looking great. It started off weak, and then pretty much strong all day. So what was it? If you look at this news is not good. This housing market index, you got the NHB housing market index. No, it's the wrong one. Housing market index came out worse than expected, 49, all right? It gets below 50, bad signs, contraction. Same thing with the Empire State Manufacturing Index. They were expecting a contraction, a slight one. It came out at negative 31. I mean, that's a very, very bad number for New York area. Basically means that the prospects for manufacturing in that area not looking good. There's a lot of pessimism right now with regards to their markets. Now, it is a lagging indicator, and certainly the inflation data we saw last week sparked a rally. This is not great economic data for our markets going forward, although it's not the heavy hitting data. Now, if I look out at and I wanted to get to a whole bunch of your questions, but I gotta run, so I will have to get to all those questions you guys posted on YouTube tomorrow. If you look at tomorrow, here is more heavy news. It's actually a double dipper. There's so many announcements tomorrow, guys. I had to use 2 slides on this one. So for those of you trading international markets, there are some major news coming out tomorrow as well. But if you start at the top, you got the ZEW Economic Sentiment Report. Now that euro, certainly over the past couple of days, has just been getting absolutely hammered. Even though it was a nice little rally up, it has now broken that, and it looks like we're drifting back to the south side. Here is, just so you can see it, we have that rally back up, right? Retest that former demand zone, which now is supply, and then ripping down. Now, we'll see if we can get back to parity on this one, but it doesn't look good right now. Certainly, if that dollar index continues its momentum to the upside, you'll see this one drift down even more. So you have the German ZEW Economic Sentiment Report coming out tomorrow. For Canada, you've got some pretty big data with CPI and housing starts, but here's what I want you guys to focus on for tomorrow. All this talk about housing. Now, Friday is the biggest housing number with the existing home sales, but there's 4 announcements this week. You have building permits and housing starts coming out. Seeing the fall in lumber and in copper, you would expect these numbers to actually start to move up a little bit. Any decline, in my opinion, means it's continuing to push to the south side. We'll get more bad data from housing, which of course would hurt GDP. So that comes out. That's your U.S. stuff. Here's the second page, which is, again, a lot of PPI and CPI numbers coming out for New Zealand, the British pound. But you also have a rate announcement coming out for New Zealand, which will be at 7 p.m. Pacific time tomorrow. That'll be after we do this show. And that's expected to be another 50 basis point to the upside. Ticker symbol for housing. Well, there's a lot of different ones you could look at. There's a lot of ETFs for the housing market. And before I get into all that, this is the last piece. Now, retail sales numbers also come out this week. I believe, I think retail sales might be on Friday. It's either Wednesday or Friday. Notice you have Walmart, Home Depot, Agilent Technologies. Those are reporting earnings tomorrow. And there's a lot more later in the week. You have Target reporting and a whole bunch of retailers. So it'd be interesting to see what happens with that retail sales number later this week, but I'll let you know exactly when that number comes out. As far as, how to short housing, you'd have to find which market segment you wanted to short. Do you want to short malls? Do you want to short residentials? What do you want to short? And you could find ETFs that cater to specific companies. Like if you're looking at strip malls and thinking those are going to be getting hammered, well, SPG is probably the biggest bet. That's Simon Property Group. Here's Simon Property Group. Actually ripped back from those COVID lows. Didn't see it did that well. Jiminy, that's a good one. You have IYR. All right, this is going to be more I forget exactly the breakdown of it. It's just a representation of the U.S. real estate market. That one's ripping up, actually right at supply as we speak at 103, but it was back at 86 just back in June. So, I think you'd have to, thank you, Thomasina. It's Wednesday for retail sales. I knew it was this week. I just had too many dates in my head. So, yeah, we could filter it apart and figure out which segment you thought would be the worst performing. In my opinion, I think it's going to be residential. I think residential is going to get hit pretty hard. There was a stat that I saw last week. It said that 7.7%. Let's see if I even have the picture here. Unfortunately, I can't really share it with you. Maybe I'll post it up for tomorrow. But I like to grab images every now and again when I see something really compelling. And, yeah, this was it. As of July 31st, 7.7% of all of the homes in the United States dropped their prices by 7.7% of the homes have dropped their prices. That's levels we haven't seen since 2015. Actually, even longer than that. So it's interesting to see that right now sellers are scrambling, starting to drop their prices. That's kind of a panic mode. Rates spiked up, choked a lot of people out. Deals fell through. So now all these eager sellers, which I'll be honest, could have been me because I was thinking about potentially selling. Now all of a sudden they're going to be scrambling to get rid of their property. So just something to keep an eye on, because if those numbers fall significantly, then what's going to happen to GDP, right? If all of a sudden you see, everybody lowering their prices and the housing market starts to take a dive, GDP is going to get hit even harder. Remember, we've already had technically 2 consecutive quarters. The final number doesn't come out until September, but we've had 2 consecutive quarters of negative GDP growth, which means recession. Oh, that's right. We have to change our definition of recession. Apparently, that's not it. Okay, that's going to do it. I got to wrap up here, everybody. Again, Les, I know you sent in a whole bunch of questions. I want to get to those questions. And Michael as well, you sent in some. Shmev, you also sent in a great one about taking profits. So I'm going to maybe do just a all Q&A one tomorrow. But I wanted to talk about the short squeeze phenomenon. Really, it's really not a phenomenon. It's just understanding the mechanics and how these things work. Knowing it, I think, will keep you out of trouble. And if some of you are real speculators and looking to take high risks, then go for it. I think running through that list that I just posted here from FinViz, actually didn't post, but that I was showing you from FinViz, we can probably go through this list and find some securities that have 60, 70, 80%. Let's see what Nikola is, right? I don't plan on buying Nikola, but let's just go look at their short interest and see what percentage it is. Right now, short float is 31%. So that's really not that bad, right? It's getting better. What about say? I closed on my house next Monday. Just awesome. Good job, Bo. That's now put that money to work for you, because for the next few months, I don't expect things to get all of a sudden surprisingly better. Ooh, Beyond Meat. That was a big fad for a while. Everybody wanted to have this soybean meat, which I still have not had a Beyond Meat burger. Percent float, where are we? Percent float, 34%. So I'll see you over the next couple of days if I can find a list that maybe gets me even a greater degree of clarity on this. Maybe filter out that list, because I want to see the lowest. Well, I hope you're tuning in tomorrow. No, 12 minutes. Yeah, Linda. Yeah, this show, when I first did it, I think I told everybody this, was supposed to be 30 minutes long. And I don't think I have ever done a 30-minute show. I think I had like a 38-minute show was the shortest one. Are the short interest figures delayed? Yes. If I believe correctly or understand correctly, it's usually 30 days is what I believe the delay is. But I think it depends where you're getting that short interest from. Again, my big problem is, do I trust that data? If we understand how shares are held, who's issuing these shares? Remember, how do you get 140% short interest on GameStop? That should not be mathematically possible. You can't sell every share that's out there and then another 40%. Bravo for the Wall Street Bets group and Reddit, whoever that chat room was, for finding that and exploiting it. Ryan? All right, I can get Ryan on. I haven't reached out to that guy in quite some time. All right, that'll do it for me, everybody. I have no guest schedule right now, but I'm going to try to get John Rowland on for you. I got questions about Austrian economics versus Keynesian economics, which is also always an interesting discussion. So I thought I'd get John O'Donnell on the program. So I'm going to reach out to John, see if I can get him on the program, as well as maybe catch up with some of our other guests. So thank you guys so much. You also said that you thought the pandemic lockdown would last a couple of weeks. Well, it lasted a couple of weeks for me. I was out. I think I did say it lasted more than longer, a couple of weeks, but... All right, that's going to do it for me, everybody. Thank you so much. If you guys got comments, questions, feedback, put them down below the YouTube video. That's where it helps. I think it helps the channel out the most. As Some of you have said in chat, hit that like button if you liked it. If you didn't, you can email me and tell me why you didn't like it. Just email me at tradermerlin@gmail.com. That's going to do it for me, everybody. I will see everybody on tomorrow's show. Take care.